All right, ready to jump into some Singapore financials.
Let's do it. Always exciting to see what's happening in this market.
Got a good mix of companies today, too.
Yeah, it looks like we've got OCBC and UOB from the banking side.
Essay test from the travel sector.
And Sasseur REIT, a bit of a wild card focusing on outlet malls in China.
Definitely a diverse group.
Oh.
Gives us a broader picture of the economy, right?
Absolutely. Each one's facing its own unique challenges and opportunities.
So let's start with OCBC.
Okay, they're reporting a 9% rise in third quarter net profits, which is pretty impressive.
Hit S's $1.97 billion, beating those analyst expectations. Always a good sign. What do you think is driving this success?
Well, it might seem like it's all about loans, but if you look closer, their interest income actually dipped a bit. The real star here is their non-interest income.
Non-interest income.
Yeah, think of it as OCBC diversifying their revenue streams. They're making money from things like wealth management fees, investment banking, insurance.
So they're not putting all their eggs in one basket.
Exactly. It's a sign of a bank thinking long-term and adapting to the changing financial landscape. And it's paying off. They're projecting a solid net interest margin for the year.
And they're still predicting loan growth, even if it's in the low single digits.
Right. And the return on equity is looking healthy, too, at above 14%, which shows they're making smart decisions with their capital.
Okay, so overall, a pretty positive picture for OCBC. Now, how about UOB? They're also reporting strong third quarter results. Net profit surging 16%.
Yeah, up to a record $1.61 billion. Definitely some similarities to OCBC here. Strong performance in trading and investment income.
Shows they're making some smart moves in the market. But their CEO is projecting some pretty aggressive loan growth, right?
Yeah.
High single digits for 2025.
Exactly. That's a big jump from the low single-digit growth projected for the rest of this year. It suggests UOB is seeing some very positive economic indicators on the horizon.
It's a strong vote of confidence in the Singaporean economy, for sure. Makes you wonder if other banks are going to follow suit with those projections. What do you think? Is UOB being overly optimistic, or are they onto something here?
Tough to say for sure, but it's definitely something to keep an eye on. Their confidence is noteworthy.
All right, let's shift gears a bit. Out of the banking world and into the skies.
You talking about assets?
Yep, the company that handles in-flight catering and ground handling services, reporting a massive 214% jump in profits for the second quarter.
Wow, that's a comeback story. Remember, they were hit hard by those travel restrictions during the pandemic.
Absolutely. This profit surge is a clear indicator that the travel industry is rolling back to life.
At least in this region, yeah. It makes you wonder, though, if there's still more room for assets to grow as travel continues to rebound.
Good question. But there's a bit of a caveat to this good news. Changing Airport, SA and Primary Hub, is planning to increase fees.
Starting in 2025, right? To fund those airport improvements and handle those rising costs.
Exactly. But it looks like the passenger fee increase will be fairly minimal, around 1% or less for an economy ticket, so not a huge deal breaker.
True, it's something to factor in, but it's unlikely to completely derail the travel industry's recovery. And for assets being so closely tied to Changi, this fee increase might actually benefit them long term.
If it leads to a better airport experience, yeah, it could attract even more travelers. So even with the fee increase, Assat seems to be in a good spot. Now for our final company today, let's head over to China, to Sasseur REIT.
Outlet malls, right. Interesting.
Yep. They're reporting a 2% decline in rental income for the third quarter. A little different from the positive news we've seen so far.
Yeah, that decline is probably linked to those dropping outlet sales, likely connected to the current economic conditions in China. Consumer spending isn't as strong as it was.
Makes sense. Outlet malls rely on that discretionary spending, so they're feeling the pinch. It's a reminder that even companies operating outside of Singapore are vulnerable to global economic headwinds. But Sasseur REIT has actually achieved a pretty impressive 52.1% total return for its unit holders since its listing back in 2018. That's right. Highlights their ability to deliver value even in a tough market. They've clearly got a knack for navigating those ups and downs in the Chinese retail landscape.
So, a bit of a mixed bag for Sasseur REIT, but their long-term track record is encouraging. What are your initial thoughts on all of this so far? Anything standing out to you?
Well, I'm really interested in how it's fascinating to see the mix of performance. Some companies are riding high, others are facing challenges.
Definitely highlights how dynamic the business world can be and how interconnected everything is. You can't just look at the numbers in isolation, right?
Exactly. Got to consider the economic context, the industry trends, even global events playing out.
Every report is like a piece of the puzzle.
And we're trying to put it all together, see the bigger picture. What's really striking to me is that contrast between banking and travel.
Oh, yeah.
Banks like OCBC and UOB are projecting strong growth, confident about the Singaporean economy.
And SATS, while benefiting from the travel rebound, they're dealing with rising costs and potential disruptions.
Makes you wonder if the banking sector is kind of a leading indicator of economic health.
And travel is still playing catch-up after the pandemic hit. Yeah, I can see that.
Makes sense, right? Banks have access to so much data. They're lending to businesses, individuals.
They probably spot those positive trends before they become obvious in other sectors.
Right. So thinking about those trends,
Yeah.
what impact could this have on other industries?
Well, if banking is a leading indicator, we might see that optimism spread.
A ripple effect, yeah. Increased lending could fuel expansion, investments.
More jobs, more consumer spending. A positive feedback loop for the whole economy.
That's a pretty compelling scenario. Makes you wonder if we're on the verge of some serious growth.
Too early to say for sure, but the signs are definitely there.
And it reminds us how interconnected all these industries are, how they can influence each other.
Absolutely. Like with Sasseur REIT, those events in China, they have a direct impact on companies here in Singapore.
It's a globalized economy.
Mm-hmm.
You can't analyze any company in isolation anymore. Got to think about those global forces at play.
For sure. Staying informed about those trends, the geopolitical lands, it's essential for understanding these financial reports.
You mentioned earlier the importance of looking beyond just the numbers. Can you talk about that a little more?
Yeah, absolutely. Profits, revenue, growth rates, those are important, but they don't tell the whole story.
Right.
You need to consider the business model, the
The
competition.
management team, their long-term strategy,
It's about understanding the why behind the numbers, seeing the whole picture.
like being a detective,
Like, yeah,
piecing together the clues to solve the case.
exactly. And the more pieces you have, the better you understand the situation.
Okay, so we've covered a lot today. Analyzed those 4 companies, talked about those broader economic trends. Before we wrap up this deep dive, I want to leave our listener with a final thought. We've seen how these companies are adapting, right? Diversifying, navigating those disruptions. What other challenges and opportunities do you think are out there for businesses in Singapore and, the broader global economy?
That's a great question to think about. Agility is key, wouldn't you say?
Definitely.
These companies we've talked about, OCBC, UOB, SATS, and Sasseur REIT, they're all demonstrating that in their own way.
Absolutely. And for our listener, someone clearly interested in this world.
Mm-hmm.
Staying curious, asking questions, it's all part of the process.
Yeah, the financial landscape is constantly shifting. You got to stay informed.
So keep learning, keep exploring, and keep asking those questions. Thanks for joining us for this deep dive into the Singapore financial scene.
It's been a pleasure.
Hope you gained some valuable insights and maybe feel inspired to keep digging deeper into this world. Until next time.